Toyota, Japan's biggest company by revenue and a key driver of the global economy, is now raising prices in the US. Starting in July, Toyota and Lexus models will cost over $200 more on average. The timing? No coincidence. With US tariffs hitting imported vehicles hard, Japan's auto industry is feeling the squeeze. This is not just a pricing adjustment, it is a signal that global trade tensions are starting to bite. Trade talks with the US remain stuck, and pressure is mounting. Could this trigger a major shift in strategy for Japanese companies? Quickly hit the like and subscribe button for updates. Let's get into the details. Starting in July, Toyota is cranking up sticker prices in the US by an average of $270. Lexus, their luxury line, is also joining the party with a $208 average increase. On the surface, it sounds like a response to the 25% tariff on imported vehicles and parts recently imposed by the Trump administration. But Toyota insists otherwise. Is Toyota playing it cool to avoid political backlash? Or is this just a standard annual inflation adjustment? Either way, US consumers are about to pay more, and not just at the gas pump. Japan's first export dip in 8 months. Auto giants feel the heat. That $270 price hike? Just the tip of the iceberg. Zoom out and you'll see Japan's entire export machine grinding slower, thanks to US tariffs. In May, Japan's exports dropped 1.7%, breaking an 8-month streak of gains. The biggest punch? Automobiles. US-bound car exports plunged 24.7% in value, despite only a 3.9% drop in volume, which ultimately means that Japanese automakers are eating the tariff costs to stay competitive. But how long can they keep that up? Toyota alone says it lost 180 billion yen to tariffs in April and May. Honda's expecting a 650 billion yen hit for the year. The broader auto sector, which makes up nearly 28% of Japan's US-bound exports, is on defense. And the trade talks? Still going nowhere. Japan failed to secure a tariff exemption after the G7 summit. That leaves Tokyo scrambling as it faces a looming 24% reciprocal tariff, kicking in on July 9th. Even the stock market's flinching. Auto stocks are down almost 12% this year, the second worst in Japan's market. If you thought this was just about a price tweak at your local dealership, think again. This is a global squeeze, and Japan's economy is squarely in the crosshairs. For Japan, this is not just a trade scuffle, it is a potential economic body blow. The US is Japan's single biggest export customer, taking in 20% of its total exports and accounting for 3.4% of Japan's GDP. So, when car exports crash 24.7% in a single month, the impact cuts deep. May's trade deficit hit 637.6 billion yen, imports sank 7.7%, and GDP is already under pressure from weak domestic demand. A recession warning light is blinking. Some economists warn US tariffs could slice a full percentage point off Japan's GDP. Tokyo's leaders are desperate to avoid that scenario. Prime Minister Shigeru Ishiba made a last-ditch effort at the G7, but walked away empty-handed. The Bank of Japan, already boxed in by low rates and a bloated balance sheet, has little room to counteract this drag. Even Toyota is bracing. It expects profits to fall 21% this fiscal year, with 745 billion yen erased by currency swings and tariffs combined. Meanwhile, Japanese automakers are holding prices steady to stay in the US game, but that comes at a cost. Margins are thinning. If no deal is struck by July 9th, things could get even uglier. Sure, tariffs were supposed to punish Japan, but the US is not walking away unscathed. In fact, these 25% duties might be boomeranging harder than expected. Start with the obvious: higher prices. Toyota's $270 hike in the US is just the beginning. Subaru and Mitsubishi are already raising prices. More brands will follow. And with cars and parts being some of Japan's biggest exports to the US, the impact ripples through dealerships, repair shops, and supply chains. Then there is the consumer. Higher sticker prices plus inflation and interest rates? That is a recipe for weaker demand. Japanese automakers employ thousands in US plants, from Kentucky to Indiana. If profits fall too far, layoffs or production slowdowns could follow. Toyota's already racked up a 100 billion yen operating loss in North America this year. The US might import less from Japan, but do not forget, Japan still bought $80 billion worth of American goods in 2022. LNG, aircraft, pharma, meat, The tariffs put all that trade at risk, so this is not just tough on Japan. It is straining a massive two-way relationship. Washington may be flexing muscles now, but the aftershocks could rattle the US economy in ways no one's priced in yet. No deadline, no panic. Japan isn't playing the July 9th game. With July 9th looming and the US threatening to jack up tariffs from 10% to 24%, you'd think Japan would be scrambling. But according to Tokyo's lead trade negotiator Ryozi Akazawa, that date is not the finish line or even a line at all. We're not treating July 9th as a hard deadline, Akazawa told reporters, brushing off the pressure. Talks with the US are still active, but do not expect breakthroughs on a schedule. Japan, he said, is navigating this situation like walking through fog. That fog is getting thicker. Despite 3 phone calls and a face-to-face between Prime Minister Shigeru Ishiba and President Trump at the G7 summit, there is still no deal. And while the US has hinted at possible deadline extensions for countries negotiating in good faith, Akazawa refused to confirm whether Japan would even ask for one. The real issue? Time and attention. With global crises like the Middle East heating up, Washington may not even be able to focus on Japan right now. But make no mistake, Japan is holding firm. Akazawa said, "We won't compromise on protecting our auto industry. That means Japan is prepared to keep talking, even if the tariffs bite." So, where does Toyota go from here? With tariffs slicing into profits and trade talks stuck in neutral, the automaker is clearly shifting gears. The message from GAC Toyota's 2025 Technology Day was loud and clear. Future survival depends on innovation, not negotiation. Toyota is going all in on electrification, software, and AI. At the event, the company rolled out 2 new energy vehicle platforms, 3 advanced hybrid systems, and a next-gen electronic architecture. This is not just about cars, it is about building a smart mobility ecosystem. They are also leaning into partnerships with Chinese tech giants like Huawei, Xiaomi, and Momenta to fast-track intelligent vehicle features and launch their China R&D 2.0 AI initiative. In short, Toyota's betting that smart, electrified, and locally adapted vehicles are its best hedge against global trade volatility. Analysts expect more Japanese automakers to follow suit, investing in regional production, diversifying supply chains, and accelerating their transition to EVs and AI-powered mobility. But even with the pivot, challenges remain. Currency pressure, raw material costs, and weakened consumer sentiment, especially in the US, will weigh on recovery. One thing's clear though, the fight will not just play out at the negotiation table. It is now becoming a race through tech, speed, and strategy. In the end, let's take an overview of the details from today's video. Toyota is raising prices in the US, not as a reaction but as a strategy. Meanwhile, Japan's exports are falling, automakers are absorbing tariff costs, and trade negotiations are crawling forward with no clear deadline in sight. Toyota is already looking beyond the gridlock, investing in EVs, AI, and new energy platforms to stay ahead in a rapidly shifting market. Can Toyota's tech-forward pivot protect it from long-term damage? And will Japan and the US find common ground before more economic fallout hits? Comment below, hit the like and subscribe for more updates. See you in the next video.